QuickBooks Pro Desktop 2021. Tax line mapping, adjusting entry, book depreciation. Let's get into it with Intuit. QuickBooks Pro Desktop 2021. Here we are in our S-Corp test file. We currently have the open windows open. You can open the open windows by going to the View dropdown, selecting the open windows list. In prior presentations, we set up the tax mapping within QuickBooks. We then exported the information from QuickBooks directly into the tax software, in our case, Lacert. Lacert being owned by Intuit, the owner of QuickBooks. We also exported the trial balance to Excel so we can do a reconciling item between the tax basis and the book basis, as well as any other adjustments that need to be done within our Excel worksheet. So our Excel worksheet currently looks like this. Tax software currently has this information within it. If we go up to the first page of the 1120S, we're not tied out to what was on the books because we're at the 8810 here for the taxes on the tax income, and here we were at the 100,000, and so we might have some other adjustments involved. Now we're looking at the depreciation expense, which is often an issue because one, you could have a difference between book and tax depreciation. You may not always have a difference. You might be putting your books on a tax basis for depreciation, but typically you will have that kind of difference. Now, it's also the case that oftentimes you will be using the tax software to calculate both the book and tax depreciation. Therefore, the accountant or the tax preparer may be the person that often does the depreciation adjusting entry for both the book side of things and tax side of things. And therefore, they might do it in like a worksheet such as this. Now, if the book side of the adjusting entry, you may want to enter that directly into the QuickBooks system, or do your adjusting entries to get your adjusted trial balance correct here, and then enter it into QuickBooks before you export to Lacert. But no matter what you do with the depreciation, again, you're going to have a problem because you can't just overwrite what's in the system because it needs to tie out to the schedules that are in the tax software. So let's go back to the tax software and say, okay, here's what we have. We got the 20,000. If I go back to the depreciation schedules, we have a different schedule for the tax basis and the book basis. Let's look at the book basis for now and say, okay, we have to record this adjusting entry. This is one adjusting entry we didn't do before we exported the software from QuickBooks to Lacert, the tax software. So we'll have to do the adjusting entry. On the book side of things, the depreciation for the year is $14,286, as is said here on the tax software. So I'm just going to do that adjusting entry, and then we'll do the tax entry next time. I'm just going to do this in my worksheet over here. And again, this is one thing that you might want to do before you export. Actually put this into QuickBooks and then export. But we're going to do it here. Now, we don't have a depreciation expense down below because it was 0 when we exported the trial balance. So I'm going to add a depreciation expense. It's going to be in alphabetical order down here. So I'll try to put it in the same location that it would be located in QuickBooks. If you have a question as to whether an account is already in QuickBooks and it just hasn't been exported, you can then go to QuickBooks, take a look at the lists and the chart of accounts, and be down here and say, okay, is there a depreciation expense down here? You can even search for it up top by typing in now, which that's a new feature, by the way. But if we go down below, I don't see a depreciation expense, so we're going to add it. And then when we add it, it's going to be like in alphabetical order. You may even add it if you have access to QuickBooks, and that's the one file you're actually using. It's not just a copy. Then you could actually add it here first to make sure that you have the ordering lined up. You might then go to here and say New, and say I want to make this a expense type of account, and that's it, and say Continue. And this is going to be depreciation, so I'll say depreciation. And then the tax, we may actually just leave blank on the tax line because again, we can't pull it over because it's going to override what's in the system if it was to pull over into the system, because the system has to pull it from the depreciation schedule. So I'd actually leave that blank, and then it'll show up as not being mapped in Lacert, which is good because we need to map it to what is in the system. So now I can see, okay, it's right under the compensation and above the employees. So then I can look over here and say, all right, compensation and employees. I need it right there. So I'm going to add a line. I'm going to select this whole row, not the whole row, but just those cells within it. Right click on it and insert. And then I'm going to shift this down. So I have another item, and this is going to be depreciation. I'm going to put a 0 here. Notice it populated the 0 across now. I'm going to make it green to indicate that's the one we are working on at this point in time. we're going to do the standard adjusting entry for depreciation, which is a debit to the depreciation and then a credit to accumulated depreciation. And then we have the amount that we pull from the tax software, which says it's 14,286. 14,286, debit and the credit. Debit and the credit, 14,286. And then we simply post this out. So if I post this out, the 19,592 is going to go up on the credit side to 33,878. So that means the book value is now at the 66,122 as opposed to before 80,408. And then we're going to post the other side to the depreciation down here. This would then be equal to or plus the depreciation. And that goes up. And that will then make an adjustment to the net income now at the 85,714. So net income now at the 85,714. Now, if I go back to the tax return, if we go back to the tax return here and I take a look at page 4, note that we have these two line items on the balance sheet, which are basically hard-coded. Those are being driven directly from the trial balance. But we would like these two to basically be pulled from the depreciation schedule. And this is kind of a problem because this means to have them hard-coded like this could mean that these two items don't tie out to the depreciation schedule, and that wouldn't be good. That would be a problem. So in other words, if I go to the data input screen here, then for the balance sheet, these two are black because they're being hard-coded directly from the trial balance, and they're kind of, these little asterisks here means that it's kind of a semi-override type of function here. So if this is indeed the case, if we have these in here taken directly from the tax return, directly from QuickBooks, we want to make sure they tie into what is on the return on the depreciation schedule. So now we changed it so they don't. So one way we could do this is we can do an adjustment on the trial balance. So let's take a look at that now. So here we have our trial balance with the same kind of layout, the book numbers, and then we get to the ending book numbers and the tax numbers. Let's see if we can enter the same adjustment as an adjusting entry rather than a tax entry in the same kind of format that we did over here. So we'll just debit depreciation and credit accumulated depreciation. Now to do that, I'm going to have to add the depreciation down here below. So I'm going to have another column or another row that needs to be added. So I'm going to say account. I'm going to add an account, and the account's going to be depreciation, and it's going to be an expense type of account. And so we have that. So let's add that. And then I'm going to see if we could do a journal entry. So the journal entry tab's the second tab here. So I'm going to say, I can go back to the first tab and I'm going to say add a JE journal entry as of 12/31. And this is going to be going to depreciation expense is the account. Depreciation is going to be the debit for the 14,286. So we'll say 14,14286. And the credit to accumulated depreciation for that same amount. And we'll say save and new. And let's say cancel the new. We'll just say save and close. And there we have it. So now it has our adjustment for the debit here and the credit then up top. And so that 33,878 now lines out to what we have, 33,878 on the book basis on our side. So that's how you can kind of enter an adjusting entry in here. That looks good. And then if we wanted to map it, to check the mapping, we'd go to the tax line mapping. The accumulated depreciation we know is going in correctly. And then the depreciation expense that we added it's now showing up top. Now we could map this to basically override in a similar way that we did with the accumulated depreciation, but again, I don't really recommend doing that because there's going to be a difference between tax and the depreciation. So I think this is one line item we're just going to have to deal with and go and adjust. But now I'm going to go ahead and post this to the return. I'm not going to map the depreciation. I'm going to post this to the return, which will change the accumulated depreciation. So I'm going to say okay. And now the depreciation is still being pulled from the schedules. I didn't overwrite the depreciation. And if I go to the page 4, then on the balance sheet, we now have this pulling over at the 33,878. So if I go back to the data input, so that changed now. If I go back to the data input for the balance sheet, we can see that those two items are hard-coded at the 100. So those two are correct, but I'd rather not have them hard-coded. Let's see if we delete these. If I delete those two items. So now we have our information that the 100,000 isn't pulling over, the cost isn't pulling over, but we have this 24,490 pulling over, but that's the tax current year depreciation. So let's see if we can adjust that. I'm going to go back on over and say, okay, we want the 100,000. I'm going to hard code that. And then on the other side, I wanted to calculate this on the book side because we have a difference between the book and the tax. So I'm going to tell the system by going into this miscellaneous area. I'm going to tell it for the book, we want the current year book depreciation. So the current year book. Let's see what, and then on the book amortization, we don't have any amortization, so that's fine. Let's see what that does. If I go back on over, we're going to say, now it changes it to the current period 14,286. So now I'm going to go back on over and say, okay, what if I enter the beginning balance over here? The beginning balance according to the depreciation schedule, which we would have our beginning numbers if we were rolling this over from the prior year. It would be, the prior period was that 19,592. So the 19,592, if I go back to the balance sheet and I say, let's take a look at the balance sheet and say, now we have the 19,592 here, 19,592. So that should calculate out. So then if I go back on over, we're going to say, all right, S Corp, and then page 4, balance sheet. So now we got the 100,000 and the 33,878, and it's pulling from the prior balance and then taking the current activity. So it's kind of calculating it for us. I'm not totally overriding the system, and that brings us to the 33,878. So that's the 33,878. So that looks correct. However, every time I export what comes from the trial balance over, it's going to hard code this over this 33 here, and I'd rather not have it hard coded. So I can change the mapping on that. So I'm going to go back to the trial balance and say, hey, I want you to pull over this 100,000, make that black again instead of blue, but don't override this one because I want it to test that in the system. So I'm going to go back to the trial balance, and then I'm going to go to the tax mapping line, and I'm looking for the accumulated depreciation. I'm basically going to turn that off, and I think you might want to turn it off within QuickBooks so it doesn't map that one out. So it's not going to be hard-coded possibly, so that you can then take it from the depreciation schedules. So here's the line item. I'm going to say, can we, if I unmap this, so to unassign it, you go down here to unassign selected. So I'm going to say unassign, and then I'm going to say close. We'll close this out. So now I'm going to try to post it to the return again, and if it turns black, then it posted it. I don't want it to post it there. I don't want it to override, so I wanted to unassign it. So I'm going to post it and see what happens. So I'm going to say, oh, okay here, and let's take a look at the tax return. So we still have the 100,000 showing as blue. It didn't turn black like I was kind of expecting it to do, but it's still there, and it's not posting anything to the less accumulated depreciation, which is good. So I'm going to go back to the forms then. And scrolling down to the forms, we have the 24,490. That's pulling from the depreciation schedules not being overridden. And then our tax schedules down here on, well, let's go to page 4. If I go to the S Corp page 4, then we have our 100,000 and the 33,878, which is the 66,122, and that ties out to what is over here. So that looks good. Now, next time, we're going to have to do the tax adjusting entry and make the adjusting entry for the tax side of things, given the difference between the book and tax.